Well, Dow futures are pointing to a rocky start to the markets this morning. Dow futures had been down over 200 points overnight. Here's a look at futures now. Dow futures lower by 43. Now, much of this appears to be a reaction to President Trump's call for stiff tariffs on steel and aluminum. For more on this, let's bring in Sean O'Hara of Pacer ETFs and Michael Lee of Investmark Advisory Group. Nice to see you both this morning.
Morning.
Good morning.
So, Sean, I want to start with you. You know, President Trump says that trade wars are easy. What do you think? Is this sort of the potential of a trade war? Is this what's casting such a shadow over the markets?
I think it's got the markets a little bit concerned, although I think what's really going on is I think this is Trump's way of starting to renegotiate some of these deals. You know, you heard Wilbur Ross talk about the automobile tariffs. In Europe, they tax our cars at 10%. We tax theirs at 2.5%. I don't know anybody that would say that's free or fair trade. I think Ronald Reagan once said that free trade is only free if it's fair. So it's not a huge number. As he said, it's $9 billion worth of tax on steel. But I think this is the opening foray. And I think what the markets are worried about more than anything is that it gets out of control. And I'm not sure it's going to get there.
Well, I think that's, you know, the big question right now. Michael, what do you think of what he just said? And also, you know, the market was volatile even before this tariff controversy. So where do you see us headed now?
Yeah, so Sean makes a great point here in that I can't see this getting out of control. The U.S. imports, if you just look at that as a standalone number, would be the 5th largest economy in the world. So why would anybody want to get in any sort of trade war with us? Our economy is on really solid footing, and we have a much bigger stick, if you will, than anyone else. I think this volatility the headlines may talk about a trade war. I think this has more to do with interest rates and inflation coming back in the fold, things we haven't seen in almost a decade. So that reorganization of assets is causing far more of the turmoil than, say, these headlines.
And, you know, the Dow is up 34% since Election Day in 2016. So, you know, Sean, I want to go back to you on this. You know, if President Trump does follow through on this plan and does announce a formal decision, do you think that we're going to see another move like this in the markets, or will it be muted because of the announcement he made last week?
Oh, I think the reaction to his announcement's already in. You know, there's a secondary piece to this in particular, and why I think he chose steel, is that, you know, he's pushing an infrastructure plan. And, you know, that's a major $500 billion to $1 trillion, somewhere in that neighborhood. That's a public-private partnership. And I think he thinks that that would be a terrific way as a part of that plan, for the U.S. steel manufacturers to participate. But I think the bigger picture is that, you know, we went for almost 2 years without any disruptions in the market, without any bad news, really, without anything that spooked the market in any way. And now we're starting to get to the point where I think prices are gotten to the level right now on a PE ratio where things are starting to appear a little expensive. And all that really means at the end of the day is that smaller and smaller things can have an impact. When you're trading at a low PE, some of these ancillary stories might not have a big impact on stock prices. But when they get as high as they are, then I think people start to think, well, down the road, maybe things won't be as good. And so let's start to reposition portfolios today.
Mike, I want to turn to you real quick just to ask you about your thoughts on whether or not this could affect the Feds and how many interest rate hikes we see.
You know what? I don't think so. I think what's going to impact the Fed is the speed of economic growth this year. I think the Fed is a little bit behind the 8 ball in that they should have been raising a little bit more proactively in 2015 and 2016, but it got a little bit overly political. So as the speed of the economy ticks up, so goes the Fed. I don't think I think this talk, whether we're at 3 or 4 rate hikes, is not really a big deal. I think the big questions come to happen 2 to 3 years down the road when how fast are we going to need to constrict the economy. So I can't imagine these sorts of tariffs having any impact on Fed decision. As Secretary Ross said, $9 billion a year is really pennies to the entire U.S. economy. So I wouldn't be looking at that for any sort of Fed policy.
All right. Well, you both have very calming voices this morning on this. Thank you, Sean and Michael.
Thanks for having me.